Hello, my friends. Brett Pattison here with Irongate Global Advisors. It is January 2017, and it is time to make your portfolio great again. Unless you're already a client, then it's probably pretty darn great. Here's how we're going to do it. All right, my friends, so how are we going to make your portfolio great again? It's pretty simple. We're going to focus on the positive. We're going to be optimistic, and we're not going to let pessimism drive any investment decisions that we make. Before we talk about the importance of being optimistic and some other things as well, understand if you're listening to this webcast for the first time that we at Irongate Global Advisors, we are not focused on returns. We are process driven. We know that if we follow our process, which largely is focusing on the probabilities of making money through stocks, through options, through private investments, we know if we follow that process that the results will come. That's how we do things, and that's how we've created great historical returns. That said, let's take a look at how we finished 2016. This is the S&P 500. You can see on the bottom that the bottom is the timeline. The far right-hand side is the percent that the index was fluctuating around for the year. And I've also labeled a few crazy events that occurred. You can see that we started the year just absolutely brutal. Worst start in market history to any year, mainly because of oil. The price of oil dipped, and China, concerns about China's growth. People focused on the pessimism quite a bit. Oil companies going to go out of business. The world is coming to an end. If China slows down, oh dear, we're in another global recession. You can see how that worked out. Market rallied, did completely fine, and then we entered Brexit. And the EU voted to leave, Britain voted to leave the EU, and people thought Europe was just going to completely die. And it didn't, right? And then the market kind of went around for August, September, October, into November, and the election, and Donald Trump and Hillary Clinton, the two most unpopular candidates ever, were going to destroy the world. And they haven't. And the market completely rebounded and has done great, and ended the year up 12.5%. One of the reasons I labeled that is that whole idea of being pessimistic. I've had a lot of people reach out to me lately and say, hey, this bull market has been going on for a very, very long time. It can't continue to go higher. We're due for a bear market. And my response is simply, hey, don't worry. We're managing your money. We've got a bear market game plan, but we're optimistic about the future. Earnings are growing. The economy's improving, continues to improve and do well. Don't let mostly the media drive fear into you to where you make a bad decision. Brian and I certainly have that conversation weekly, right? And we're always focused on the good things. What are the good reports coming in? Because we know the media is focused on the exact opposite. And we do our best in our weekly newsletter to bring out those good things, right? Not that we won't focus on bad things if they're there, but I don't really see a whole lot right now. So that's where we finished 2016. One last note to 2016. Just as you look at your own portfolios, the S&P 500, which is the U.S. stock market, was up almost 12.5%. That does not mean that immediately brings your portfolio up 12.5%. The interesting thing that I had no idea about when I was in the brokerage world, investor education world, was that people are afraid to take risk. I'd say 8 out of 10 of our clients are afraid of market risk. When we build their portfolios, when we build proposals and we find out how much risk they can tolerate, 8 out of 10 times it's less risk than the overall market. So if you're taking less risk than the overall market, then guess what? You're going to have lower returns than the overall market. Those 2 of 10 clients that say, hey, I'm willing to take the risk. In fact, I want more risk than the overall market because I want to beat the market. Well, then they were able to accomplish that. So it's all determined on how much risk you're willing to take. And for those of you that don't know, mostly those non-clients out there that don't know, you better find out, right? So here's another reason why it pays to be an optimist. I just grabbed a chart, I printed it up, I wrote with a Sharpie all the crazy things that have happened from 1928 to the present. The 29 crash, World War II, we got Vietnam, Watergate, Black Monday, and you can see that all these crazy events, these crazy things that have happened, it's just blip on the radar, right? Look at Black Monday. Everybody talks about the Black Monday in October 87. A blip on the radar. The market went straight up. Don't get caught up into the negative news to where you put your money all in cash and you don't invest it. Relax. Find those good investments. In fact, Jeremy Siegel, in one of my favorite books, Stocks for the Long Run, we're looking at returns from 1802. How he found 1802 returns, I have no idea, but he did. 1802 to 2012. And the annualized return before inflation, right? So total return, stocks 8.1%, bonds 5.1%. That's pretty darn good returns since 1802 on an annualized basis. Don't get caught up into the negative pessimism that the media and so many people, advertising and so many others want you to listen to. All right, last thing that I'm seeing from clients especially those that are nearing retirement, right? They're pretty close to retirement, or hey, heck, some people are even 85, 90 years old. So what happens if another bear market occurs and that little nice looking furry little fella comes in and wreaks havoc in our portfolios? Well, understand this. Since 1926, it's taken an average 3.3 years for stocks to surpass the high from where that bear market began. 3.3 years. Most of you have time horizons of 30 years, 25 years, 10, 15, right? 15-year horizon. And you're I shouldn't say you, a lot of people are so hyper-focused on what happens the next 6 months. Relax. Even if there's a bear market, great, we can buy assets at a really cheap price. We can take advantage through options of that bear market, and that recovery will be even quicker, and you'll build your wealth even faster. Even if you're 60 years old, relax. You got another 35 years of life, man. 3.3 years, it's nothing. All right, so here's some New Year's resolutions. This is how we're going to make your portfolio great again for clients. This is what we're doing. For everybody else, this is what you need to do, right? You need to understand your risk tolerance. I mentioned that before. We call it our risk number. If you don't know what your risk number is, I don't even know how you build a portfolio. The link is right there at www.igga.com/risk. Understand what your personal risk tolerance is. Also understand exactly why you own the stocks that you do in your portfolio. If you don't know why you own a stock, or if you're relying upon stock tips, or some other thing like that, you don't understand the risk in your portfolio. I guarantee every stock in our portfolio, every ETF we own, we understand why. And we understand the nitty-gritty details as to why. Also, recognize and forecast your income retirement needs so that if a bear market occurs, you're going to be okay. Even if you're in retirement and a bear market occurs, you're going to be okay because you recognize, you forecast it, you understand it, and you plan for it. And that's the next thing is you build your portfolio. We call it our portfolio number, right? You have a risk number, personal risk number. You have a portfolio number. You build those two to match and make sure that your portfolio is going to get you to where you need to be. And those are the four things. Fifth thing really is pretty obvious. When you have extra cash, you invest it in the markets. pretty obvious there. But that's how you're going to make your portfolio great again. I would say 9 out of 10 people that are managing their own portfolio don't know all of those things. They don't. We're here to help you. If you have any questions, there's my contact information, brett@igga.com. There's my partners as well. Relax, my friends. We can take it from here. Thanks.
This is a purely public broadcast and is not intended to be personalized financial advice for any individual's specific situation. Each individual's financial situation is unique, and the topics discussed on this broadcast should not be relied upon and/or considered as personalized advice. Specific financial securities discussed are not intended to address any listener's particular financial situation and should not be considered recommendations. This is for educational purposes only. For more information, please contact Iron Gate Global Advisors at info@igga.com or by calling 888-591-0334.